Oh, what a week for Carvana. Blown tire, as Mr. Sozzi so eloquently put it. It looks like the used car retailer could be headed towards bankruptcy. That's according to reports and bearish calls on Wall Street, with one analyst slashing his price target to $1. The mess caught the attention of Sozzi, and that's where we find us saying, I mean, listen, we joke, but this is not a fun situation, obviously, for the people who work there. Or for investors for that matter.
I mean, I'm not joking. This is a very serious situation, Julie, and we've seen, of course, layoffs. I've started to see a lot of layoff announcements posted on LinkedIn from now former Carvana employees. So I've been tracking this. And this train wreck just continues to get worse. And that really, I would say, came to a head this week. So let me just run down really Carvana's awful week here. On Tuesday, there was that Bloomberg report that creditors reportedly banded together ahead of potential cash crunch. Now, all these debt holders, now it's just reports, Carvana declined, just shot this down in a comment to Yahoo Finance, but nevertheless, if those creditors, in fact, have banded together, that could raise the cost of capital for Carvana as it tries to restructure, ultimately not put it in a good place. Wednesday, the stock crashed 43% as a Wedbush analyst, Seth Basham, he took his price target down to $1 and really sounded the alarm bell on this company's ability to survive. On Thursday, that would be yesterday, the stock rallied. I would say a little bit of a relief rally, up 29% by the closing bell. And then today, and I wrote about this, I have this story right now on the Yahoo Finance homepage, Jefferies is out saying Carvana will run out of cash in months, more specifically by the end of the first quarter here. So a major red flag, and I believe you had two other firms as well. I believe it was Baird also cut their price targets this morning as well. So it's been a terrible, awful week. Now, I mentioned Seth Basham. He's the analyst over at Wedbush that sent Carvana shares down 43% on Wednesday. Our very own Shauna Smith in the 3 to 5 hour had the chance to catch up with him and asked him what the best case scenario would be for Carvana.
Best case scenario is that the equity gets very little dilution here and there's no bankruptcy situation. The company infuses more capital, either through a real estate sale or otherwise. And we see a debt exchange, which leads to less debt burden going forward. So that would be the best case. I will point out that the Garcias, who are the CEO and his father, they own over 40% of the company's equity. And so they have a very big incentive not to let that equity go to zero.
And overall, this is a very complicated situation. So for the average investor on our platform, I did break it down a little bit to try to make it as simple as possible because, again, this is very complicated stuff. Some problems here with Carvana. Costs of doing business are too high. Anytime you're taking a car, shipping it from a vending machine to somebody's house, let's say hundreds of miles away, that is not necessarily a recipe to making large sums of money on a consistent basis. Next, insane amounts of debt. Carvana made what looks to be a very bad acquisition for $2.2 billion last year of an auction company, essentially at the top of the market. Not good. Major slowdown in used car demand as the economy has slowed. We have seen that really pick up steam over the past 6 months. And also by the extension, because of that slowdown in car demand, you've seen a slowing in used car prices, which of course has impacted the top line for Carvana. My take here is this. They better have some cash infusion coming because as Jefferies just mentioned in that note this morning, there I am in my used Carvana car with 20,000 miles on it. If they do not get that cash infusion, it is hard to see a line of sight for Carvana being in business in its current form into the second half of next year. That's not me saying, that's just the general vibe on the street.
Yeah, you can tell from the stock.
Yes.
This week. Thanks, Soz.